So now, ladies and gentlemen, let's learn more about asset-backed lending and challenges and opportunities. So for this, I would invite the moderator of the session, Mr. Misha Pratap, partner, Bain and Company, to please join us up on stage. So meanwhile, I would request our respected speakers for this panel discussion to please join us up on stage. Starting from Mr. Narendra Mairpady, Advisor, ENQUBE Collaborations. Can we please put our hands together for our esteemed speakers? Mr. Satyam Kumar, CEO and Founder, LoanTap. Ms. Sonal Kapoor, Senior Director, Flipkart. Mr. Sumit Maniyar, Founder, CEO, Rupeek. So meanwhile, where we are waiting for our moderator to join us for the discussion, I would like to know how was your experience at GFF 2023? How's it going?
On behalf of the Global Fintech Festival, let us extend a hearty welcome to all the delegates. It is a very hard work put in by, give a big clap, no? Hard work put by all the organizers. And I'm also one among the consulting council as well as the jury. I am the jury member. And it's a very heartening to know such a large gathering and large overwhelming response. So it shows that it is one of the important requirements for India and abroad. And we have a global, and we are now having our moderator here. So very busy person, so we wish him all the best. Thank you.
Well, this is definitely setting the bar of starting 60 seconds in advance. Hi everyone, Misha this side. A quick introduction and maybe we can just go around the group. I've been around 15 plus years. Consulting, yes, but also time in the industry as well. So that's given me a unique vantage point of having looked at how traditional organizations started out on their lending journey. I've worked with some of the largest public sector banks when we were revamping their processing centers for home loans and whatnot. And 30 days, 35 days for processing a home loan file was classic case. Legal would take 10 days and income assessment would take whatever. That's where the journey started to today. I won't say home loan necessarily has become straight through, but a lot more asset-backed products are becoming straight through. But there is also a big physical dimension to it, and that's why this panel in particular I think is interesting, that it combats at that frontier of phygital in some ways to drive their value, and would love to hear the thoughts of the panelists of how they've been looking at it. I think we will try to cover a bunch of things, right from their business models, how they're looking at risk, and what are the threats we are seeing. And I'll just hand the mic over and, okay, everyone has their own one, so that's great. So maybe we'll just take 20 seconds, everyone just gives a quick round of introduction.
Thank you. I am Dr. M. Narendra. I am an or a former chairman of Indian Overseas Bank, 40 years of experience in the banking. And now I am also independent director in few of the companies. Our ENQUBE collaboration is a knowledge imparting portal, and we have been conducting quite a lot of what you call workshops, sessions, and program in aiming at giving not only in the banking, financial services, international trade, as well as in the human resource area. Just now we completed building future-ready leaders in the India's Amritkal. Thank you.
Hi everyone, this is Sonal. I represent Flipkart. I hope all of you use Flipkart, if not very frequently, but you do. So as part of Flipkart, what we do is we continue to support our consumers and our small-scale sellers. So we help them in acquiring credit for their growth in terms of working capital and other type of credit needs and so on. Over the last 6 years, I've been focusing on sort of setting up the Fintech team within Flipkart, both for the consumer and the seller side, and that's a quick one about me.
Good afternoon, everyone. I'm Sumit. I'm representing Rupeek. We are into business of monetizing India's gold. We work with banks at the back end and build an end-to-end customer experience for monetizing their gold. We have built a bunch of products on gold as a asset class. Happy to chat. Look forward to the session.
Hi everyone, I'm Satyam, and we are an NBFC at LoanTap, morphed into a platform now. So at a platform now, we support a lot of supply chain financing, and that's where the collateral builds in, and which is a new category of collateral that we have been building over there. And generally, we have been very active into some of the new age collaterals like electric two-wheelers, and we are one of the largest lender in that segment. That's through one of our NBFC iLoan. And as we discuss further, I think we'll be talking a lot about the complexity of the secured lending.
Thank you so much. I think I'll just break into a quick discussion on what I was alluding to earlier. Given we are in the FinTech Fest, and a lot of the businesses that you are addressing today, and traditionally I would say asset-backed lending is the side of saying things which are consumed, so whether it's electric two-wheelers, whether it's tractors, etc., which were funded. And then there are assets customers own, which they leverage for their own working capital needs and other credit needs, right? So the broad two buckets where gold, property, residential, commercial, all those traditional stuff comes back in, right? A lot of this has always had a lot of physical dimension. Even today to some extent, whether gold valuation, whether it's property documents and valuation, whether it's distribution access of getting to the retailer dealer. I think it would be great to get your opening thoughts of how you see fintechs disrupting this across the value chain and creating a different value, both for the customer and for themselves. So maybe we'll just go around and get your opening thoughts.
Thank you. As he rightly said, almost all the, of course, public sector bank also, everybody currently focusing on most on retail lending and MSME lending. And the corporates and most of them have access to the capital market. But as the capital market, if the interest goes up, they come to the banking field and they take the loan also. But in the area of individual getting leverage from the assets what he is owning or for a new assets to be owned, that's where he said that either gold or jewelry loan or even a vehicle loan or a housing loan or any types of purchasing, the facilities available are almost all getting through digital mode. The fact is that as and more you would get most of the data and most of the even including like property documents are all available through the government system, and today all are getting everything, even RTO, all are online. And if that is the case, the more the government public digital infrastructure or the private sector or the even fintechs that get an opportunity to utilize this infrastructure for the betterment of customers through the banking and NBFC mode, and that will facilitate early decisions also and quick delivery. So this is one of the very important aspect. And as he rightly said, for working capital, one is by cash-based lending where we are taking the overall balance sheet and their income and expenditure and overall what is the cash flow. Against that, we give the working capital. But if there are assets which are very liquid assets but are not part of the collateral for the working capital, he could also encash that through the mode of digitally, because today all receivable management under the cash management system are all managed digitally, and almost all, particularly foreign banks and new generation bank and public sector bank are managing the receivable management through the in terms of technology. If that data are all available, he would be able to get quick delivery against that. So these are all the area I think the fintechs are also looking at how they could have a ease of getting these facilities at the requirement. maybe short-term requirement or a medium-term requirement, and or a mismatch funding, or in terms of the capital which they need for additional bulk orders, that could be maximized with these assets.
I think the good points, but at the same time, I think Indian economy, while we are getting more and more formalized and on digital, as Bain, we looked at the payment structure, and I think we still have a little over 40% still on cash. By 2030, we still think a quarter to a third will still remain in cash. There is a certain, so there are barriers to fully digitizing this. And Sonal, you look at it from a pure tech platform, engaging millions of sellers. Would love to hear your thoughts of the supply that you are seeing in the market from fintechs. How are they breaking these barriers? In particular, I just want to add a little bit of a twist into that of saying, is it really a collateral-led lending today? Or is it become more customer, it's quasi-secured. Basically, you are underwriting the cash flows, etc., not really the collateral.
Yeah, I think you rightly nailed it, right? Because what's happening is, especially when you're a tech platform and you're dealing with sellers and there are MSMEs, SMEs, and they were cohortized, right? So there are a bunch of sellers that are based in Surat, or they'll be in Coimbatore or Haryana, right? And what we realize is that the need of working capital is less than 10 lakhs. Now, if you were to actually do the collateralization like how we were talking about, it still turns out to be expensive. While the data is available, but the ability of everybody in the ecosystem today, us, the fintech partners, the banking partners, the entire thing does not still come together the way we would want to when you're talking of a collateral-based loan, right? And we've tried our hands at it over the last 6 years, 7 years now. And eventually where we've led with this is that everything has to happen immediately, in real time, and which is where the sellers are also coming from. So essentially we've figured out a way where obviously we do not have a sense of cash flow of the sellers entirely, but we have a sense of how their future earning potential on the platform looks like, how the past earning potential of these sellers have been like, right? So what we have done is we've worked together with a lot of fintech partners, and in some cases not just fintechs, a lot of NBFCs, a lot of banking partners who are willing to look at data that essentially could help them, again, identify the seller as a potential borrower. But it does not have collateral of an asset, it has collateral of your future earnings from you working on Flipkart.com, right? In a soft way, Flipkart ends up acting as a guarantor. While there is no guarantee as such to say the seller will always be available, but if it's a seller that's been on the platform for 4 years, does X 100 crores a month, it does act as a soft guarantee, right? So it's a little twisted way, like you said, there is no black and white. It's a little bit of gray in the way we are operating. But the good part is that all said and done, there is always this willingness on the platform available where everybody is willing to say, okay, what else can we do to sort of expand the credit pie, right? Nobody comes and says anymore, this is out of my jurisdiction, I'm not going to do this. So that's where we're headed towards.
Thanks, Sonal. I think you are looking at Rupeek, your focus is on a very decentralized holding, right? It's not on necessarily on a platform. How are you seeing this manifest, and how is really technology helping solve this problem?
I think of all the asset ownership every Indian household has, you have depreciating and appreciating. And towards depreciating, it's consumption driven, and towards appreciating, it's typically investment driven. Now, for self-employed borrower, the investing assets or appreciating assets are typically where they go to when they have to pledge them and get, raise capital for their businesses. Now, historically, technology has played very limited role in doing this. Few things which we have been observing is cutting down operational cost. All these asset-backed lending have huge OPEX costs. So that is one opportunity where even we are trying to play. Second opportunity is where accurate assessment of the underlying collateral. It could be house, it could be gold, it could be, well, gold is far more accurately assessed irrespective of where you're doing it, probably plus minus 4%. But you cannot say the same for house. Or land property would be even more volatile. Commodities, for example. So how do you use data science to say assess soybean price movement in the peak of Kharif season is another way it can add value. So point I'm trying to say is there is a loan to value ratio. There is a operational cost. There is also credit cost in terms of fraud prevention and whatnot. And to top it all, ultimately self-employed borrower values convenience. The turnaround time really matters. And as you were talking about the 10-day file, 5-day file, even when we started, things were terrible in workflow management. Most banks didn't have proper API for asset-backed lending. Even most of them are still building today. But that's the technology's value addition in terms of functional utility. So customers can expect better service, reduce rates, or higher loan to value ratio. All of this aid to their business performance.
And Sumit, just as a follow-up question to you on that is, while there is value that data analytics will bring to your commodity pricing and your ability to price that for your customer, there is some level of process efficiency that can be brought in. From a core distribution, given this is into thousands and millions of households who own this, right? Doing and getting access to them, people have thought of different models, right? Uberization of jewelers and whatnot. What is the innovation you are seeing that is going to bring the big value unlock from the traditional branch-led gold lending that has been there?
Sure. So I can talk about overarching and what specifically we're trying to do. So if you take a step back and look at all the collateral storing space, particularly pertaining to gold loan, all these branches, different lending partners they have hardly, all branches, few particular lenders in their particular branches have gold loan but you have dead space in the strong rooms of these banks, which is wasting. Now what we do is we are able to partner in the same pin code with multiple lending partners, utilize their bank branches to store gold rather than opening our branches. What we save in OPEX is what we pass on to the customer. And as a result, the interest rates we are able to offer are sustainably anywhere between 5 to 15%. So when I talk about interest rate, it's the interest payout on the same tenor, same product structure are lower for the end customers. And all of this also aids to banks' efficiency because now they are able to utilize their branches far better. In order to do all of this, we have developed, for example, in our case specifically, we have branch walk-in as well as doorstep model. So when you do this particularly for our industry, when you do doorstep service, there is lesser social stigma. People are far more open, especially upper middle class, is far more open to take gold loan right in their home, comfort of their home, rather than going to lending partner branches. The manager asked the first question, sir, time kharab chal raha hai. So this is particularly a truth of about our category. And again, without technology, without this 4G distribution, we could not have envisaged all of this. Even when we do loans at doorstep, as I talked about, because of not having brick and mortar presence, all the cost benefit goes on to the customer.
Thanks, Sumit. Satyam, back to the core theme that we started with, breaking the physical model barriers. You are trading on two very different asset classes, supply chain finance and electric two-wheelers. One a much more concentrated dealer-led model. The other is all your invoice discounting and stuff, which has been seeing very interesting models in the fintech space. How do you see this disruption going forward, and what's the value unlock going to happen?
Sure. I think I'll take one more moment just to explain the fact that the entire unsecured market, if we see, it's more than 70% of the banking sector lending, or all the lending data that you get published by RBI. So what most of the fintechs or a tech that we have been talking in the last couple of years was more about 10%, 15%, or 30% of the market that we have been talking about. So that's the difference, and that's the size which we are debating in this panel when it comes to a market. Within that market, now if we see what is technology doing, technology is solving three things. One, it's doing the biggest risk in that segment was fraud risk. Okay, and if we look at a fraud risk, you mitigate it with more and more data. That means there is an increased TAT of processing a loan by the bank, whether it comes to a property loan, or whether it comes to a home loan, or whether it comes to a loan against property, or any of the segment. Now, other than loan against property, where the collateral is invariably, many cases, it's a self-built or the collateral information takes more time to come and plug in. Most of the other classes of the security, the information is readily available. So like if I go to a platforms within like a Flipkart ecosystem, we work on a retail IO side, on the medical side, right? So the invoice get generated on the system, on the fly, and you have a collateral created on the fly. So you don't have to visit, you don't have to pick up the data, you don't have to ask the data from anyone else other than creating a consent architecture between three of us. So the data is getting created, and in two-wheeler also, you have an invoice value. You know exactly when it's getting registered at the RTO, so you have all the RTO registrations and everything. In housing loan, 70 to 80% of the sales of a home loan actually takes place on a builder-developed products. And each of the builder development is pre-approved as a project approval, and the data is centralized with each of the banking system. Okay. So the data is available. It's available in patches. Okay. What most of the platform like a LoanTap does is that it integrates this separate data points, separate sources, mix the data in a format which is a consumable by the traditional banking sense around the collateral value, the cleanliness or the being clean and marketable collateral, and the income parameters. So whether you want to work on a GST, or you want to work on a banking, or you want to work on ITR or any data set, you are able to create those kind of a data and a cash flow statement on the fly. This is what is happening in the sector. Now this segment has picked up because this segment was dominated by the banking sector. Large ticket size, and some of the lower ticket size was the priority sector lending. So again, there has to be a particular cost which the NBFCs doesn't find, very easy to break those barriers. So now the banks in last 3 to 4 years, by way of a co-lending, by way of risk sharing and all, has started participating in the ecosystem. Once they started participating in the MSME ecosystem, they saw the benefit of how an onboarding engine or a BRE or even an AI works. And that's where the interest came into building these things in stuffs like a KCCs and all. So the digital transformation, which actually we will see, will first happen in stuff like agri lending, because the valuation is not so difficult there. You know, you zoom in your drone and satellite systems and all. You put a demarcation between a land to land. Unlike Bombay, the price differences are not so much. You know, once you move 70 kilometers outside Bombay, right? So all you want is a broad market, and anyway you are going to lend 50% or 55% or 60%. So broad approximation of 5% does not really hurt the collateral itself. So that's where it has happening. KCC is now getting done fully in a Twarit style at Bank of Maharashtra, powered by LoanTap systems, or any other systems tomorrow, which will happen. So this is where it has come in. Similarly, tractor registration. So tractor registration, tractor collateral verifications. We have a bunch of fintechs which is doing that far inside in the interiors and all. So that's where the digitization on secure sector has already started. That's the current flavor which I can give what is happening there.
No, very interesting flavor. Mr. Narendra, I'll bring you in. You've seen the public sector banks from your vantage point. How do you see them adopting this change and this ecosystem prospering? These are good green shoots, but is it going to be mass adoption and drive that value?
You know that during COVID, including State Bank of India, even under the emergency credit guarantee or for the agriculture or almost all types of facility, they did through online. So the entire process of documentation, everything. And now one morning, now earlier you asked about the cash and all, with the ONDC coming, where all the retailers are all will be using that e-commerce through that mode. Other side, GST is becoming more and more requirement for all that. So all will be coming into that, and the aggregator who that RBI is permitting to get the data, then the public sector bank also will definitely go into the technological mode where this type of funding can be done on because the customer data which the public sector bank possess are so large which could be definitely through the AI and other things, no, they could get the full-fledged information. And that's why the Reserve Bank of India recently came that through UPI, you can have a pre-sanction facility also communicated, and as and when the customer requirements, he could avail, not only in the through credit card mode or other mode, including this type of finance. So your issue is another over and above that. Now central bank digital currency for retail payments and wholesale payments. That being the case, now every small customer or individual or retailer can use the central bank digital currency against which the bank could give the funding. So I would say that, and only in all these cases, the digital players, fintechs and all will have to be the source by which they get the business. And as per the new regulatory requirement, it has to be through the regulated entities, it gets to the customer, and they have to be compliant with the KYC and other norms, so that there is no difficulty in banks also, or the public sector banks adopting them and getting collaborating and partnership, so that their volume will go up.
No, thanks, Mr. Narendra. And actually, in our own experience, I've been working with a few large institutions. I think they're trying to be like the pizza makers. It's like we'll work with different fintechs, different slices, but only we know how that pizza is going to come together, right? And so someone is going to provide us the technology, someone is going to help me access customers, someone is going to give me risk management, analytics, etc., and so on. But how it comes together is our secret sauce, which brings me to a bit of a point. It's been debated a lot of how large institutions have been reacting. There's always been discussion, is it competition, is it collaboration? Today you see a lot of large NBFCs who have a large customer franchise going into a super app mode or marketplace mode. They're going more and more horizontal. They're going across products. They are trying to get into the payments party as well, even if it's a little late. They are changing the buying behavior of some of the asset classes that you folks fund as well. Sonal, you represent platforms which are anyways digital first, and folks have been looking at more and more financial products, including manufacturing them on their own. So how do you all see, as you look at this ecosystem, the next 3 years in India? Is this more a spirit of collaboration, or how are these models going to disrupt? Some of your thoughts on how you're looking at this. Sonal, maybe you go first from a platform lens.
No, for here, no, the Bob World has come now, UNO has come. Similarly, Bank of India is doing a super app. There are private financial players are providing super app, which will be again in line with the bank, no, that get API or whatever through the model, they will be connected. So as he rightly said, today the convenience and the easy is the mode, and big institution also will have to be in the ground level, and they have to adapt this. Please.
No, I think I agree. There are multiple ways to look at it, but this is how at least I look at it. The world has always been like that, right? I mean, we all use Apple and Android, so they both took different strategies. They both succeeded in their own way, right? So it's going to be pretty much like that. I think I'm not going to comment where everybody is turning into a super app, because I think there's also a little bit of the trend in the market, and everybody eventually will figure out what their right to win is. But I think what's going to happen for sure is that, at least for digital first platforms, where they were always valuing technology, experience, and customer first, they will definitely see some ecosystem pilferage in terms of them trying to tap into their customers in terms of providing more additional services. Where, of course, Flipkart also came into the picture. I mean, we didn't say we want to be a fintech because fintech is booming. We said we want to do fintech because our customers are asking for credit, our sellers are asking for credit, and we have no way to provide them credit on the platform if not for us, right? So I think there is a little bit of a backward integration the way platforms like Flipkart are thinking of, and I think it's here to stay. The good part is it combines transaction and credit in one flow, right? So I need credit now because I'm about to make a purchase. I need credit now because I'm about to sell 100 crores of stuff. So both of those instances encourage the utilization of credit in a different way. And I think it's going to be very, it cannot just be a platform where I say, I want to be a super app today, but I'm going to do everything. But of course, for banks, for instance, and banks have done that, right? I mean, they were traditionally, they got into lending, but they did better in insurance in some cases, and that's what will happen. So I think where we will see the world moving is everybody will figure out where the right to win is. But the ultimate winners will either be in two categories. They'll be like this very vertical focused fintech players who will focus, like for instance, maybe Rupeek, right? They're focused on gold asset. And they will continue to do so well, maybe in that particular space, that the experience is just wow, and the customer does not want to go anywhere else. There could be players like us that will be multifold. And then there'll be, of course, players, right? The larger bank institutions and BFCs that have decided that they're going to sort of see where additional touch points can they develop with the customers. But that's going to be a little bit harder, I believe. But again, you never know where do they innovate, right?
Thanks, Sonal. I think good to hear it from a platform lens. Sumit, from a so far monoline specific asset class, how do you see this evolving as a opportunity and as a threat for you? Broad, more platforms, more super apps, one-stop shop for customers, owning that relationship.
Sure. If you have an engagement with a customer which is recurring in nature, think about like what UPI did as a hyper engagement tool. It has created an opportunity for customers to come to app and naturally create an ability to cross-sell and upsell. So I don't think the answer is that either or. It is naturally going to coexist, because if you think about it, there are two, broadly speaking, there are two types of customer engagement you can think of. So one is serendipitous discovery, where I'm going to, UPI app, PhonePe, Paytm, and there is a banner. And because millions of people are looking at the banner, naturally one time I might try Forex, I might try loan, I might try insurance. That's a serendipitous discovery. And here the law of numbers. You see the serendipitous discovery also in kind of Facebook. They do lead generation from mattress to toys to higher ed. In financial services, I think the UPI as a platform provides that capability a lot. My sense is, apart from serendipitous discovery, you need specialization. And specialization, as Sonal talked about, if home loans were to be made delightful or a lab has to be made delightful, someone has to really chip away the end-to-end execution process. So I think that's a different task, and there would be specialists, there would be vertical specialists. You would see Forex, foreign students. Even for them, you will see specialist companies. We already have a few. We will see asset-based, or end job to be done kind of specialist verticals coming in fintech. So it's a wide space. We are still in very early days for fintech. But that's the sense I have, that it's not a either or. You will have coexistence of both.
I think one flavor of this also, so I'll go back, let's say a decade or so back, NBFCs typically were not necessarily looked as credit-led organizations, they were looked as collection-led organizations. And hence, at those days, you would say it's the presence of the collection teams which dictates where you do business, not necessarily. Now with digital platforms, ability to access this customer grows, some of the still traditional organizations feel the strain of collections, the strain of serving certain PIN codes and zillas and talukas. What is that disruption that you are seeing in that space that fintechs are looking to solve, which unlocks this collection-led barrier that generally was there?
Credgenics.
Me? Or, yeah, let him talk. Yeah.
So the data itself, if you go and ask for a customer's data in a banking system, okay, you will get a typical data of a phone number or an address which is KYC related, and that's it. Or what is the loan amount, what is the default, etc., etc. You go to a fintech and you go to the newest of the data. You will get his social media handle, you will get his PF account, which bank, his last ATM will be tagged where he used it, his all the services that he has availed, or all the touch point which he has with the society is tabbed there. Now, each of these touch points is not good enough for you. Okay, each of the touch point will give you 1% success, but you need to touch 100 of the touch points. So if I go and search a PF database, it will give 10 customer success. If I go and touch something, LinkedIn or something, or a Naukri.com or something, it will give me some success. So this kind of an architecture, and then building a whole machine learning layer and AI on top of that. It's a very different and uniformity of the communication and the speed of the communication. So communication and all are much easier to say, but the touch points which it has gives in a easy accessible way is unparalleled.
I think I hear you, but the counter to that is that with reinforcement of our data privacy regulations, ability for individual institutions to record, store all these touch points data of a customer, it's an interesting balance, and we'll see how this evolves. Do you see this means we need more industry level utilities that help drive some of this information access?
So many of them are, like a PF database is an industry level data, right? So many of them are there. Some are a private network, okay. Is it lender specific? The loan belongs to a lender. And when a loan belongs to a lender, lender will have all this relevant data. That's what I want. I mean, it's not like stealing a data left, right, and center. It's about a lender and a lender's relevant data.
And your recovery currently, all have adopted this UPI or mandate payment and all. I am in one of the NBFC also. Around 60-70% is through all the technological mode only. The physical cash payments we are insisting for reducing. So because that is a very cost also. So the recovery efficiency at the 85-95% now, even during COVID also, later also. So the technological mode of recovery is being preferred. Only when it becomes NPA, there may be a necessity of outside, after all efforts, where you engage physical recovery efforts. And similarly, some of the now, like, the factoring has been permitted for NBFC, threads have been permitted for all of them. So here it is all immediately on due date, it will be paid. And similarly, now the government of India, all the MSME have to pay within 45 days for MSME. So otherwise it will be legally problem. So in all those cases, I don't find any difficulty. The fintechs can play very important role and ensure that most of the SMEs upload the bill and get the benefit through quick payment through this mode.
Well, love the optimism on the panel, and hopefully that translates into more material movements. Conscious of time, and we are in 2023, especially at Bain, we've been for the last 2 years working with OpenAI and all, so I don't think any conversation theme is full without talking a little bit of what Gen AI and AI is doing. So while I know that's not the core theme of this panel, but I do want to get your parting shots on how are you seeing Gen AI play a role in asset-backed lending? Are there some early value cases that you're seeing emerging more than the others? Obviously, there's all the customer service angle. The techies are happy with the coding, etc., and co-pilots and stuff. I would love to hear your thoughts on how this technology is disrupting at all your customer experiences, your employee experiences, etc.
So it does three things at LoanTap. One, it does not allow a customer to go through the multiple churn. कि आपका home loan नहीं ले रहा है, आप हो रहा है, आप gold loan ले लो. या आपका personal loan नहीं हो रहा है. It tells you on a day one. It tells you on a day one that which customer will fit into which kind of a profile or which kind of a product. So that's a BRE or a product selection engine which runs there. The second, a policy reset that a bank does every 3 months in terms of a credit tightening or credit easing. That happens automatically every 15 days or every 30 days. What better you can get? You don't have to call a meeting. You do not have to call a credit committee. You do not have to call the chief risk officer, and the policy is getting reset or retightened or eased out every 15 days. Nothing better than that. And the way, so like a bureau, even you'll ask the bureau team, they will say that on a 750 plus, you'll have a 4% default or a 5% default and all. Okay. And here you have a combination of a data which gives you something where you can really say that at less than 1% I can work. If I want only this much of market share, I can work at less than 1%.
No, thanks, Satyam. Sorry, I'm just going to push because I want to get one or two questions from audience. So quick shots on others. Gen AI in your world.
Look, I think it would be completely transformational in the sense that how Infosys TCS disrupted the workflow management in the old days. I think you will see layer after layer going disruption. There is no point in speculating because some of the use cases we will not be able to imagine sitting here today. So let the time pan out.
So he's more in the wait and watch. It's coming. Well, let's see what comes.
Yeah, no, I completely echo his thoughts, right? I think there is a lot of work happening in certain pockets, certain parts, and I think over a period of time, we'll figure really what it brings together to the table. But it's too early to say because like you rightly said, it will disrupt everything. But I think we should actually see what it disrupts before we comment.
Oh, you know, the public sector banks also now taking market-related expertise as a chief digital technology officer. And similarly, all banks are taking what you call analyst from the digital angle. That is the specialization taking only to utilize artificial intelligence and machine learning and use from the customer's point of view as well as internal point of view. So that there is no other way.
Yeah, and that's an interesting point for another day. Talent in large institutions, how it's changing. We'll just take one or two questions quickly from the audience.
Hi, Sonal. One question for you. Flipkart is probably an interesting use case for the OCEN framework to be implemented. Although the benefits have been clearly highlighted, what are the challenges that you see in the implementation of OCEN on a platform like yours?
I think the larger issue is how do customers react to it, right? See, again, I think as a consumer, if you ask me, I'm in favor of open network. Actually, as a platform also, if you ask me, I think I'm in favor of open network, right? But I think the larger challenge still remains at what point in time does a consumer, right, shift from you to an open network? Because till the time the consumer has not made that shift, you technically cannot do anything, honestly, right? So the only thing we are doing right now, honestly, is while we are all supportive, we are waiting because the consumers need to shift first and we will follow. But could we lead that wagon, given again the data privacy laws that we all are aware of? Honestly, no.
Perfect. Thank you.
Anybody else?
You have the gentleman in the back.
Hi. Is there an option for foreign company or non-residents who can invest in the short-term asset-backed lending? Do you see that happening?
Let's talk separately. On a serious note, there are platforms which are in listed NCDs, and you can Google them and find it. Bunch of them are there, Wind Wealth, and yeah, a couple of them are there. I can probably hook you up.
Do we have more questions? Oh,
Yeah.
We'll take one more.
So myself, Amay, I'm from a company called as Rupeek Card, and we are into secured credit card. I was expecting some view on secured credit card. Since credit card is now enabled on UPI, right, we have some unique credit card users to the tune of 45, 50 million, right, and 80 million cards in the market. But credit card consumption, if it has to truly expand, either you ease out underwriting or you figure out some other ways. I think secure credit card can be that one magical way of getting more people into fold of credit. Would like to hear if there are any attempts from your companies or any view you have, any one of you.
So secured card is getting done with the bank partnership in one pocket or another pocket, but the issue is the unit economics. The unit economics is not favoring. So even if you do it currently, I mean, sometime back there was a unit economics was favoring, but the segment which requires a secured credit card also has a free UPI access because secured credit card is against a FD or it will be against a gold. I mean, you can't create any other way of FD is my own cash, and bank I'm getting less FD rate, and on platform for using it I'll have to pay more. So unit economics is not favorable. It is more about building the credit history and all, and about a convenience. So instead of running a cash, so on that I don't know, I mean, how much marketing we can do to push those kind of issues.
Sorry, what's your firm name?
Rupeek Card. It's a seed stage company. It's a small startup. It's just been a few months now.
Got it. No, so we do have that product. It's in early stages. Yeah.
But if most of your gold assets are in physical form, right? Digital form is very less. So the underwriting and then, figuring out is going to be tricky in terms of...
True. Yeah, I agree.
I'm sure that conversation can continue, though I thought he got confused because Rupeek, he almost heard Rupeek and arts after that.
No, don't worry. Don't stress out.
That was on the lighter note. Thank you so much. I think some interesting thoughts. While the traditional utilization of existing physical assets, whether it's in bank storage and all, with some thoughts we talked about, but usage of data, managing that risk, I think it's an interesting bet that agri-lending is the biggest unlock that technology will lead to, given some of the simplification around it. And we have a mixed view of how Gen AI is coming through. Some wait and watch, some very clear use cases. CROs might have a thing to think about as they look at it. But thank you so much, everyone, and hope that gives some thought starters. It was lovely hosting all of you, and thanks for the opportunity.
Well done, bye.
Thanks.
For you.